What's up, everybody? All right. We broke the line. All right, let's go over everything right now. I'll spell it out for you as I always do. First of all, if you've been following me for any length of time, you know, and especially people who are subscribers to my service, MMT Trader. Also, if you happen to find me when I used to be a contributor to TheStreet.com, which I stopped doing last year, but all the way going back to just before December 2015, when the Fed said that it was about to, for the first time in 9 years at that time, prior to December 2015, it signaled to the market, to investors, that it was going to reverse course on interest rates and start to raise interest rates. Now, I've always said in these videos and, in my writings that it's very easy to be an investor or a trader, at least from a strategic or what should I do standpoint, because the people in control, the authorities in control, that could be the fiscal authority, it could be the central bank, it could be the monopolist or whatever, they tell you what they're going to do. So basically our job is just to sit around and wait until they tell us, and then to understand what the impact of that policy is going to be. That's where MMT comes in. That's, I have, of course, the only applied approach or applied MMT. Anyway, back in, November 2015, or it might have been October, the Fed said that in December 2015, remember Janet Yellen was still Fed chairperson at the time, said the Fed, we're going to start raising interest rates. And that's when I said loud and clear, the bond market, bull market is over. You have to be shorting treasuries. I was never one of those guys saying, there's all this big supply and the Chinese won't lend to us and blah, blah. It had nothing to do with that. And I've always explained that it has to do with the fact that the Fed is a monopolist. It sets the interest rate. And they told everyone, they broadcast it. That's why we all sit around at 2 o'clock every month when there's a Fed meeting, waiting to hear what they tell us, okay? They said in December 2015 they were going to raise interest rates, and at that point I said to everybody, it's the end of the bond bull market, it's the beginning of the bear market, and since that time, without wavering at all, I have been telling everybody, even you who come here for free advice, and my subscribers, I tell everybody, be short the bond market, interest rates are going up. Now, I've been absolutely correct on that. And recently, this year, the beginning of this year, and I made several videos on this, there was some hesitation on that rate increase. We kept getting up to 3%, and there were a lot of people who thought they were very smart, saying, that's it, the rate's the top, and then blah, blah, blah. I said, that is not the top. We're going to go through. We're going to break the line. Remember, all you chartists who said, the charts tell me what's going to happen. The charts tell me. Anyway, we're at 308 today. Okay, so I called all this, and I'm telling you again, it's going to keep going up until the point where the Fed says it's not going up anymore. That's number one. So I was absolutely correct on that. And everybody who has been following me on that, positions, we all are positioned. All of my subscribers are positioned short the bond market or in instruments that mirror a short bond position. So they're doing very, very well. Second, I said, as an outgrowth of rising interest rates, which 99.9% of the world doesn't understand, they think that is somehow bullish for a currency, and they think it is what is necessary to squash inflation, and even economists and the Fed people themselves believe this. To the contrary, I said, that is not anything of the sort. It is price setting higher, okay? It is inflationary. It is functionally a fiscal expansion because the government is a net payer of interest. So I said, as an outgrowth of the Fed policy and other policies like fiscal expansion, which is the budget and government spending, the dollar was going to go down. Commodities led by gold was going to go up. All that's been happening too. Now, in the recent few weeks, or I should say maybe in the recent month, there has been a disconnect between rates, which have been going up, and the dollar now, which has stopped going up. Stopped going down, and it's having a rally, which is a short covering rally, and gold, which is having a correction. Now, let me explain something to you. Just because you want everything to go simultaneously in tandem in the direction that the fundamentals dictate, just because you want that, doesn't mean it is going to happen at your behest. Okay? Over time, those things correlate, and I will tell you the dollar is going to go down, gold is going to go up, inflation is going to increase with the rise in interest rates, and the reaction by the Fed now to raise interest rates as they see the inflation. But just because that is not happening at the moment, just because the dollar has some bid to it, and just because gold is in a correction, does not mean that those things have reversed course. All right? How many times have we seen, if you've been in the markets as long as I have, and I have seen this many, many times, umpteen times, that we have some macro trend in place and the markets move in accordance to that macro trend, but sometimes they deviate, sometimes they wind around, sometimes a certain thing or a certain market that you think should go simultaneously with that trend, it meanders in the opposite direction. Ultimately, it gets back on track, but that is what is happening now. So, without doing a long drawn-out video here, let me just quickly go back over. I was 100% correct on my call of higher interest rates, and that is happening, and everyone who has followed me on that is doing very, very well. I was 100% correct on the dollar going down on the rate hikes. We've had, 6 or 7 rate hikes since December 2015. The dollar index was at 98. Today it's at 92, and it was lower than that. We're having a short covering rally. I was correct saying that when rates hike, gold is going to go up. In December 2015, gold was at 1,050. Today we're at 1,290. We were up to 1,275 recently, okay? All that has been correct. You're having a correction in gold because zombies think higher rates are bad for gold. It is not. You're having a short covering rally in the dollar because zombies think, hey, if high rates are so great for a currency, why don't you go buy the Argentinian peso? I think they're paying 40 or 45%. That thing is collapsing, and every time they raise rates another increment higher, it goes down even more. Why don't you buy the Uzbekistan Som, I think it's called, okay? Why don't you buy the Ukrainian Hryvnia, or whatever that thing is called? They all have high rates, 20, 30%. The currencies are collapsing. So don't tell me. The dollar is going down. This is a short covering rally. I was 100% correct on the rates. I kept saying we're going to break the line. We're going to keep on going. And gold is going back up. That's all I want to say for now, everybody. Take care. Bye-bye.